Michael Blurry is predicting that the stock market will crash. Should you be worried? So in this video, I'm going to talk about the big shorts, Michael Blurry's prediction for the stock market and his big bet against the stock market and whether you should be worried or not. And before doing that, you can go over to adamfire.com, especially if you're an expat or a high net wealth individual, and see how I can help you. Now, Michael Blurry became famous because he correctly predicted the housing market in 2007. And not only that, but he actually made a lot of money from it, which is why he was featured in the movie The Big Short. So a lot of people think he has credibility. But here is the interesting thing. When you look at investment performance, one of the declarations is often past performance is no guide for future performance. And what I found is past correct predictions are no indication of future correct predictions. In fact, most people who get one big thing right, one huge thing right, tend to get the next thing wrong. So before talking about Blurry, I'll give you some examples of this. The economist Nouriel Roubini got 2007 and 2008 wrong, but he's got most of his he got it right, but he's got most of his subsequent predictions completely wrong. So if you type into Google, you'll be able to see people looking at Roubini's track record, and it's pretty bad. Peter Schiff, the president of Euro Pacific Capital, he's probably an even better example because he got 2007, 2008 completely correct. But he's predicted that oil will go to 200, 300, gold will be at 5,000, silver will be at 200, the dollar would crash, the US economy would never recover from 2008, there'd be hyperinflation in the US. So most of Schiff's predictions have been disastrous, and whenever he's asked about it, he just says, oh, I haven't been proven right yet. So the key thing is, if you would have listened to the likes of Schiff and Roubini before 2008, you would have absolutely beaten Arab people and their returns in 2008. However, longer term, you would not have beaten the stock market. A great example of that is on CNBC in 2009. Nouriel Roubini was speaking with Nassim Nicholas Taleb, another man who predicted the 2008 crisis, and they were asking them about assets to park their money in. And Roubini says, cash is king right now, and Taleb agreed with him. Since then, the US stock market, if you factor in dividend reinvestment, has gone up by 5 times, and cash hasn't kept pace with inflation. It would have been a disastrous bet. So if you would have listened to these people, you wouldn't have actually medium to long term made more money from just doing nothing, right? 2020 is an even better example of that. Those few people who predicted 2020 and the crash, they kept their money in cash, and then they didn't actually take advantage of the surge back up. So in 2020, the US stock market did about 17% for the whole year, but the markets fell by 50% in the middle and then came back up again. And when I asked many of the people, well, hold on a minute, the market has gone up much more than in a historical year, because the average US stock market return is about 10% or 11% per year since 1945, adjusted for dividend reinvestment. They said, oh yeah, but it's because of quantitative easing, and next year the market will probably be down. And then guess what? In 2021, the market was up again. And the point is, you can never know how the dominoes are going to fall. So for example, in 2020, there was a big quantitative easing after the crisis, and also the economy did start to recover much more quickly than expected, which is one of the reasons, not the only reason, but one of the reasons inflation has been more persistent than most people have expected. So stock market returns, were much better than people expected. Nobody could have seen that in advance. So that leads me to Michael Blurry. If you look at his track record, he has consistently actually been wrong. So for example, he predicted World War III 5 or 6 years ago. Hopefully I'll never be proven right about that. He's also predicted the stock market will crash and fall almost every year now for many years. And basically, if you just type into Google Michael Blurry prediction track record, you'll see his overall prediction record is very, very weak. And let's have a look at this in another way, or think about this logically. if Schiff and Rubini and others, Blurry, if they have to be announced every time they go on a media interview or every time the media quotes them as, oh, this man predicted 2007 correctly or 2008, the big crisis. Think about it, that crisis was almost 20 years ago now. If they had successfully made some good predictions since then, many good predictions, people wouldn't have to keep banging on about that. They might introduce them as, this was the person who successfully predicted the 2008 crash and the subsequent increase in stock market values after that. Or this was the man who predicted the 2008 crisis and the 2020 crisis, and so on and so forth. The fact that the media have to kind of bang on about 2008 and the people who got that crisis right shows how weak that argument is, because a better way to introduce a guest would be to show that their long-term track record helped them beat the market. So for example, if they could introduce a guest who said, this guest predicted 2008 and 2020, the two big crashes of recent times, but they also predicted that the market was going to recover quite quickly. That would obviously be much stronger than just saying they predicted 2008, because that doesn't mean anything. Yeah, they predicted 2008. Well, so what? The markets, it was 2 or 3 years, that the markets recovered. Nobody lost money in 2008 if they were just in the general stock market and didn't panic sell. Likewise, 2020, the few people who predicted 2020, so what? It took markets a few months to recover from it. So it doesn't matter if they predicted 2020. In fact, if somebody made a right prediction in some ways, it can sometimes show the long term they're actually going to lose to the market. Because if someone predicted 2008 and they stayed in cash, but then after the crash they stayed in cash, they haven't beaten the market. So I wouldn't worry too much about these predictions. And another thing I would point out is, by definition, these men will be proven right again in the future. What do I mean by that? They've predicted 1,000 of the last 3 crises. In other words, every time something happens in any part of the world, they predict that basically it could be a crisis. So by definition, if somebody's watching this video in 10 years' time, is it possible that Michael Blurry or Schiff or Rubini or others like them will be proven right again? Absolutely. In fact, I think they will be proven right again by definition, because they're predicting almost a crisis every year. And what do we know about stock markets long term? What we do know about stock markets long term, and we can't say for sure that the future will replicate the past, is that the overall trajectory, especially if you reinvest dividends, is very good, but there are regular contractions of 10, 15%, and there are those times when markets will crash by 30, even 50%. Just look at the last 20 odd years. It's happened on 3 occasions where the major stock markets have fallen by 50% or more. Warren Buffett's Berkshire Hathaway, which is one of the few stocks to have beaten the market very long term, I think it's gone down 50% on like 3, 4, 5 occasions in the last 50 years. So what we do know is there absolutely will be a crash. Will it be this year or next year or 2030 or 2040? I don't know, and I don't think anyone knows for sure. So there will, of course, be a crash in the future, but that's irrelevant. If you just stay in the market long term, you don't have to be worried about crashes. You just have to stay diversified, stay long term, keep adding money, and you'll be absolutely fine. And the last comment I would make is the media should kind of reframe this. What do I mean by that? Let's say you like to buy real estate and the price of real estate halves in value. What would you think? You would think, well, I can now buy 2 houses for the price of 1, and then when it recovers, I'm going to make loads of money. Or if you're in the supermarket and there's buy 1, get 1 free, it's a good thing, right? So therefore, actually, a different way of looking at this would be to say, next time the market crashes, we can't predict when it's going to happen, and in addition to that, we shouldn't just keep money in cash, losing to inflation in anticipation of the crash. But next time it happens, it's an opportunity because you're buying stocks for a cheaper price. So whenever the media put out fear-mongering stories about a crash or a lost decade, it's nothing to worry about, especially if you're young enough to kind of see the whole cycle through. Because a good way of looking at investing is when you're a net buyer of the asset, you should want the price to go down or stay the same. If you are a net seller, in other words, you're a retiree or close to retirement, you shouldn't want that because you're going to be selling out. So actually, if you just look at this logically, if the markets go down or there's a crash, or even they don't go down or crash, they just have a lost decade, that is actually a fantastic opportunity to buy more. So I never would be worried about these kind of things. And often the media just kind of play this kind of game where they know that what leads, and that kind of fear mongering often causes people not to invest in the first place or panic sell when the market crashes. So really try to avoid that.
Depends on every person's individual goals, how much money they want to invest, how long they want to invest. And I did not have at all the feeling from any bank with which I had contact with that they were interested in these things. Whereas with you, it was from the very beginning obvious to me that you had experience in these matters and also were interested in what I wanted to achieve.
Anyways, I'm very, very pleased and positive to say that I believe I've picked the right one. The results in the last couple of years have overreached my expectations by far. And I see no reason why it should not continue. Of course, I can highly recommend him as your financial advisor for now and for the future, because hesitating is missing out.
So I'm investing a lot in the Middle East market, but the amount of returns I'm getting from there is very low as per the amount of returns I'm getting from the investment portfolio which you made for me. Obviously, the best result in market right now is Adam.